Wednesday, February 24th, 2021. Monaco 64, home of alternative economics and contrarian views. We're going to look today at why all fiat currencies would collapse in a hyperinflationary currency collapse. It's not just the fiat dollar that would do it. And I want to look at the British pound as well, because I think there's some shenanigans going on in the British pound. The move in the British pound versus the dollar just looks very unnatural. And it's really strange that it started about 3 weeks ago when the Bank of England actually said they're considering negative interest rates. And you'd think that would be very bad for the pound. Yes, we're being told by the Bank of England and Keynesian economists that the economy is going to pick up massively because everyone here, almost everyone I would say, is taking a vaccine. But people need to look at the bigger picture, not be fooled by the Bank of England or the Keynesians. They want you to stay in their game. Their game is more debt, a weaker fiat currency. They don't want you to jump out of the boiling pot into the safety of precious metals. And I think that's what's happening here in the UK. They're trying to get people to stay in the game, as I said, and it just doesn't make sense. We've had in the last fiscal year, well, the fiscal year that's going to end beginning of April, so in a few weeks, just over a month, about 400 billion deficit pounds. Yes, that doesn't sound much. That doesn't have a trillion on it. But our economy is a 2 trillion pound economy. And I would say it probably shrunk even more from 2 trillion by the time they count it at the end of the fiscal year. And why do I say that? Well, because they've kept us locked down and shut in our houses. They've destroyed businesses, a lot more than people thought. So we're talking about a budget deficit of about 30%. And they've extended programs like the furlough scheme, which was supposed to end October last year. Now I think it's going to end in the summer of this year. I mean, to think that the British economy is going to rebound really strongly, like the Bank of England says here. Bank of England economy to rebound strongly due to vaccine. I mean, this is just crazy. They want to shake people off, especially due to the fact that England, the UK, only has 300 metric tons in reserves of gold. I mean, even before Gordon Brown sold half of it back in the early part of this century, the UK only had 600 tons. Countries like Italy have over 2,000 tons. Germany as well. France. I mean, I can think of many countries that have more gold than the UK. So now to the hyperinflation and why it's not just the dollar that would lose a lot of value. And what about the name dollar? Would that go? Well, I think it depends. If it's a really bad hyperinflation where everything is devastated, they might need another name. And why is that? Well, because of confidence. Yes, the British pound or sterling is still the same name that the currency had 110 years ago. And why is that? Even though we've had a big, big devaluation since then. I think the pound was almost I think it was almost 5. You know, with £1 you could almost get $5. Now you get like 140. I think the reason why the name stayed the same is because we haven't really had a devastating one-off, one-time hyperinflation. So they've been able to keep the name because people have maintained fairly good amount of confidence in the currency. So that's still up in the air. So this is one of the reasons why I'm talking about the pound here, even though we're going to look at the Bretton Woods, why all major currencies would go if the dollar goes. It's because some of you out there, especially here in the UK, might be thinking, oh wow, the pound is gonna, save me. I'm not gonna be in the dollar. I'm gonna put all my savings in pounds. I think that's a big mistake, in my opinion. You might want to, but it's up to you. So why is the Bretton Woods system so important? Well, because it was set up during the war. The Allies felt that they had to have something ready. And I think they felt that they were going to win. I think they started looking at it back in 1942 already. So the conference itself was held in 1944. It says here, the Bretton Woods system of monetary management established the rules for commercial and financial relations among United States, Canada, Western European countries, Australia, and Japan after the 1944 Bretton Woods Agreement. So the Bretton Woods system was the first example of a fully negotiated monetary order intended to govern monetary relations among independent states. So before that, it was a free market in currencies. Yes, some countries had a gold standard or a silver standard to measure their currencies, and they traded amongst each other. Private individuals, private business, but here you had the government getting involved, and I personally think that's a bad thing for governments to get involved, but that's what happened. So it says, preparing to rebuild the international economic system while World War II was still being fought. 730 delegates from all 44 Allied nations gathered at a Mount Washington hotel in Bretton Woods, New Hampshire. So they pegged, because the U.S. had almost all the gold by then. And, after the war, I think they had 2/3 of the gold reserves in the world. So that's why the dollar was at the center of the Bretton Woods Agreement. So they pegged all the major currencies versus the dollar, and they pegged the dollar versus gold. So indirectly, all these other currencies were pegged. And by pegged, I mean the exchange rates. So for the dollar, it was $35 per troy ounce. So anyone part of that signed this agreement, Bretton Woods Agreement, if they sold enough goods to the U.S. and they had a surplus of, let's say, $35,000, they could go at the end of the year, or probably any time, go to the Treasury and say, well, here's 35,000 paper dollars. I want 1,000 ounces. That's what would be done. But as you can see here, the Japanese yen was pegged at 15. $1 was 15 yen. It changed throughout the years, of course. Not very good that they changed it, but they try to keep it pegged. And why did it change? Well, probably because to help the trade flow, they had to find the right rate to keep the trade balance amongst countries. So then you have the German mark that was pegged. You have pound sterling that was pegged, the French franc, lira, Spanish peseta, Dutch guilder, Belgian franc, Swiss franc, Greek drachma, Danish krona, Finnish marka. So all these major currencies were pegged to the dollar, and probably other ones as well, like in South America, like the Brazilian, at the time was probably Cruzeiro was called, I don't know, the Argentinian currency. They're all pegged. And the Bretton Woods, the most important thing about the Bretton Woods system was the US dollar. And the most important thing that gave the US dollar its strength was all the gold it had. It was a system based on gold. It wasn't a pure gold standard, because a gold standard amongst nations is a free, how can I say, system. As you can see, this was actually the first time nations got together to make up a system. Before that, it was done freely It's just like free trade. So yes, gold was very important. Unfortunately, I won't go through it in too much detail because the point of this video is not that right now. But be as it may, what the United States did basically abused its privilege of being the reserve currency, and that's nothing new. That's probably been done in the past. And it just like spent more than it produced, and its gold reserves flowed out because other countries realized that the US was borrowing too much money. That wasn't, they were printing too many dollars that were not backed by gold. So they wanted the gold. They knew it was going to end in tears. They knew basically the United States was inflating the system. And inflating, I mean, as always, the creation of money and credit. The US dollar, basically the United States, lost almost half of its, well, maybe even more than half of its gold reserves by 1968. So yeah, they tried to keep that peg at 35, but they couldn't. And Richard Nixon basically suspended the convertibility of the dollar into gold. And that basically just ended the Bretton Woods agreement as it was signed in 1944. And despite that, all the exchange rates we have today are related to that original agreement. And because of the dollar's role since then, the dollar is still the reserve currency. They were able to prop it up with the petrodollar for many years. But that's why, all these countries that are part of the dollar system, and all of them are, they all have to have dollar reserves. And if the dollar goes, their currencies are going to go as well. It's like you consider yourself a country and consider your currency, I don't know, the Monaco 64 currency for me. And let's say I have a little bit of gold, but 95% of my savings are in dollars or pounds. If those currencies go, my balance sheet is going to look horrible. So that's how you have to look at it. It's not going to save you to be in British pounds or euros when the dollar goes, because they're all going to go. There might be maybe one or two that will do better. Maybe the Russians, who have been getting rid of almost all their dollars and buying gold. But do I want to keep my savings in rubles? No. Or the Chinese. I'm not even sure the Chinese are going to do that well because they have a lot of dollar reserves, but they have a lot of gold. Some people think they might have more gold than they actually tell us officially. I think officially they've got just over 2,000 tons. But yeah, another question people ask, and it's got to do with hyperinflation and the currency collapses. At what price do I sell my silver or my gold? Well, there won't be a price, a fiat price. Why would you want to get out of sound money when all the currencies around you are collapsing? I think the problem of price will be settled very easily in the free market. It will take a few months. It will take some time. It won't be uniform. But I listened to Cliff High yesterday, and he was talking about it. And he made a good point. What will happen is that there won't be any paper currencies around. They'll be destroyed. The only thing that will survive will be, silver, gold. I'm not sure what will happen in terms of cryptos. But let's say someone bought a Tesla car today. I don't know how much it costs, $50,000. Could be more or less. I don't follow those things. But let's say in 2 months' time, the system is obliterated. There's no paper money out there. And the person who bought that car can't charge it, has lost everything. And they need, I don't know, they need to eat. They need to feed their family. They can't do that with a Tesla. So you could go and offer them maybe 100 ounces of silver. He might take it or he might not. He could be very desperate and take 10 ounces. I'm not trying to guess how much, just giving you an idea. And with those 10 ounces, yes, you can't eat silver, but he could definitely go to a farmer and exchange sound money, real money for some food, for some eggs, for some milk, right? So I think that's what's going to happen, unfortunately. Yes, it is extreme, but I think we need to keep that in mind. But because it is a possibility, I'm not being negative. I'm just being a realist. Because when the money dies, like I think it will, that's what happens. You know, our economy is a very specialized economy. We're not all subsistent farmers anymore. So let's look at where the markets are then. It's 8:30 a.m. London. We've got spot gold at 1807.50. That's up $1.70. The high's been 1814, the low 1804. Yes, silver got hammered yesterday. I think it was something to do with options expiry. I think we need to just focus on the bigger picture. Forget about the technicalities of COMEX and all that. I think COMEX will be irrelevant pretty soon, so I wouldn't be worried. Just try to stack as much as you can. That's my opinion. So right now, silver's at 27.75. I think it got down to 27.20. So it's up 8 cents or 1/3%. High's been 27.95, low 27.45. Dow futures up down 31. NASDAQ is down 15. S&P is down 4.5. Yeah, the pound, as I said earlier, I won't dwell on it anymore, but it's at 141.82, up 0.5%. There you go. The euro is up 1/8% at 121.65. The dollar's up 1/3 versus the yen at 105.59. Dollar's down 0.2% versus the yuan at 644.80. Copper is down slightly at 418, very elevated. We were below $4 last week. We're now at 418. WTI crude is down 1/3 at 61.43. And to finish off, let's look at the 10-year yield. Yeah, that's down about a basis point at 135. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.